You're bleeding massive wealth directly to the tax office right now. The absolute worst part is that it's completely legal because you aren't acting. If you're over age 45 with more than $300,000 in industry funds, you're the ATO's favorite target this EOFI. What if you could legally shield up to $250,000 in clean profit before the midnight bell rings on 30th June? Is it actually possible, or is it just another institutional myth? It's the exact playbook used by the top 1% of earners across Australia to completely wipe out their tax bills, while skyrocketing their retirement balances. Today's breakdown exposes the exact legal loopholes within the system that your fund completely hides from you. We're breaking down the complex math so you can execute this immediately before time runs out. It's about taking total control of your financial destiny right now. But remember, before we dive into the heavy technical data, general information only does not constitute personal financial, taxation, or legal advice. You've got to understand how the system is rigged against high-income earners who don't know the rules. Let's unlock the secrets. Let's look closely at the framework provided by the ATO for the 2025-26 financial year under the new Stage 3 tax cuts. The game has completely changed across Australia, which altered the marginal tax rates significantly. If your taxable income falls between $45,000 and $135,000, your marginal rate is now 30%. But once you cross into the $135,000 to $190,000 bracket, that rate jumps to 37%. And if you're a high earner pulling in over $190,000, you're facing a brutal 45% tax rate on every single dollar above that threshold. Why are you willingly handing over nearly half of your hard-earned salary to the government? It's absolute madness. The single most effective weapon in your arsenal to fight this is maximizing your concessional contributions before the 30th of June. For this current financial year, the annual concessional contributions cap has been officially indexed up to $30,000. This includes everything your employer pays under the compulsory super guarantee, plus any voluntary amounts you add. If you're just relying on the default employer contributions, you're leaving a massive tax deduction on the table. This is where a strategic salary sacrifice arrangement becomes incredibly powerful for anyone over 45. By instructing your employer's payroll department to redirect a portion of your pre-tax salary directly into your fund, you effectively lower your taxable income. Instead of paying up to 45% taxed, it's taxed at just 15%. Within the fund, that's an immediate risk-free return of up to 30% in pure tax savings. Think about how much faster your wealth accumulates when you aren't giving away a third or a half of it to the taxman. But most people simply don't know how to look at their balance to see if they're maximizing this strategy. They trust their default settings in large industry funds or expensive retail funds without realizing that the system is structured to keep them passive. If you're earning a strong income and your balance is past the $300,000 mark, a passive approach is an absolute wealth killer. This close to EOFI. You need to know exactly how much space you have left under your $30,000 cap right now, before the clock strikes midnight on the 30th of June. Let's pause right here because this is getting critical. I want you to stop and think about your own situation. Look at your last statement. What is your single biggest financial pain right now with your fund? Leave a comment below right now and tell me. Now let's dive straight back into the advanced technical strategies that high net worth individuals use to supercharge their wealth. The real magic happens when you look beyond the standard annual $30,000 limit. If your total superannuation balance was under $500,000. On 30th June of the previous financial year, you're legally eligible for the carry-forward catch-up provisions. This magnificent rule allows you to access any unused portions of your concessional's contributions caps from the past 5 financial years. This is exactly how you can legally inject massive sums like $120,000 or even up to $250,000 into your super in a single year. Imagine the sheer scale of the tax deduction you can claim against your personal income when you deploy a massive catch-up contribution just before the end of the financial year. It can pull you completely out of the highest 45% tax bracket down into a much lower one night, saving you tens of thousands of dollars in a single stroke. However, as a high earner across Australia, you must watch out for the dreaded Division 293 tax. The ATO triggers this additional tax once your combined income and concessional super contributions exceed the $250,000 threshold. When you cross this line, the ATO hits you with an extra 15% tax on either your contributions or the amount over the threshold. Even with Division 293 taxing your contributions total, it's still significantly lower than the top marginal tax rate plus levies. It's a minor speed bump, not a reason to stop building your wealth within a tax-sheltered environment. But here's where things get incredibly dangerous for unsuspecting investors. Many people choose to make personal deductible contributions directly via BPAY from their bank accounts instead of salary sacrificing through payroll. This brings us directly to what I call the BPA death trap. This is the silent killer of OFI tax strategies across Australia. People assume that because they made a BPAY transfer on the 29th of June, the deduction is locked in for that financial year. But guess what? The ATO rules are completely unyielding. The contribution is only counted when it is physically received and cleared by your super fund's bank account, not when you press submit on your banking app. If your transfer takes 2 or 3 business days to clear, it lands in July. Your hard-earned deduction for this year is completely vaporized, leaving you with a massive unexpected tax bill and an over-contributed cap for the next year. It's an absolute disaster that traps thousands of Australians every single year. You must also closely audit where your wealth is held. Are you stuck in underperforming retail funds that drain your balance with excessive administrative fees and trailing commissions? Or are you utilizing top-tier industry funds that offer low-cost institutional investment options? Remember, general information only does not constitute personal financial, taxation, or legal advice. You need to act with absolute precision right now. The absolute ultimate insight for the top 1% is the flawless coordination of the carry-forward rules with your cash flow before 30th June. By checking your MyGov portal immediately, you can find your exact available carry-forward cap down to the last cent. If you have the liquidity sitting in a low-yield bank account, transferring that cash into your industry funds as a personal deductible contribution and ensuring it clears days before the deadline allows you to claim a massive deduction. You then lodge a notice of intent to claim a tax deduction with your fund. This single tactical move turns ordinary taxable income into heavily protected concessional wealth. It secures an enormous refund when you file your EOFI tax return, completely transforming your financial trajectory and securing up to $250,000 in clean tax-sheltered profits over your investment horizon. If you want to stop giving away your hard-earned dollars to the government, make sure you hit that subscribe button for Aussie Super Secrets right now. Don't miss our next video where we expose the brutal hidden costs of default retail super accounts. See you next time, and keep your wealth protected. Disclaimer: the information provided in this video is for general educational purposes only, and does not constitute financial, taxation, legal, or home loan advice. It has been prepared without taking into account personal objectives, financial situation, or needs. Before acting on any information, it is recommended to consider its appropriateness and consult with a licensed professional, such as a financial planner or tax agent. Specific results or future performance are not guaranteed. 2026 Aussie Super Secrets. All rights reserved.